So this is going to be a recap. So this is going to be a recap of yesterday's trade, which is 4th of August. So I'm just going to be showing you the idea behind why I chose to long the market. So what we are looking at here is the daily time frame, and we can see. Okay, first thing I need to do is I need to take the data back to what we see before 4th of August. So I'm going to delete this. So when I came into the market, this was not exactly when I came into the market because I trade in New York session. So I basically waited, but let's just assume this is when I came into the market. So what we see here is the market in its all-time high. Let's check it out. So the market got to its all-time high, which was about 23,860. Then there was an heavy drop from this point. We see these two red candle. Yeah, I painted them white on my own screen, but we see these two red candle, which indicated that the market is already in a downtrend trying to fall. So we can assume that the market might want to retest and maybe push up back, but this momentum is very heavy, so we need to be careful if we want to buy in this market. So the initial idea I had on my head when I came into this market is I'm just going to follow the trend. This market is dumping. I'm going to dump. But when I came into the market, that was yesterday, I saw a different thing. That was why I decided, okay, I'm going to long this market. I'll be showing you what I saw, why I decided to go for a buy. So let's just jump into 4 hour and see what and see what's happening as well. So looking at it, we can see that okay, the market got to its all-time high. Then we started breaking structure downwards. So we saw that we broke structure down here. This was the first break of structure. We broke another structure here, which can justify the statement that okay, we are in a downtrend. So what do we see again? Let's go to maybe 30 minutes and see. Let me reset this. And we can see the spikes even clearer. That okay, this is a market that is dumping. This is actually a market that is dumping. So what I did when I came into the market, first of all, is I marked up all the supply zone that is going to possibly react to and dump. So there was one I saw here, so I marked this out. This is a good supply zone that the market rejected from. This is one. This is another one that was very clear as well. This is one supply zone that was very clear that the market has a high chance of getting to and just dumping from. Then this is another one. That's if it's going to retest and go this far, or we can never tell. So what I usually do is the first zone will be an inducement. So there's a chance it's going to just clear that first zone. And there's a high chance it's going to react from the second zone because a lot of people might want to, I don't know, that might not be a good reason, but it's just inducement for inducement's sake. But maybe the idea is a lot of people might want to sell from here. So the market just pretend as if it's going to fall from here and just induces the people and move to the second zone. So now let's see what plays out. Let me take it to, let's use 5 minutes and play it. How do we play again? I think we use this, right? Forward. Let's see. Okay, yeah. So let's just play it out and see what happens. So most time I wait till New York session before I start. Am I recording? I need to confirm this. Okay, yes, I'm recording. So most time I usually wait till New York session before I do anything. So this color here is basically this one you see here. This is Asia. This one looking like red is London session, and this one, which is gray, is New York session. So let me just go to 15 minutes. Yes, so I'm going to skip till we get to New York session. Skip. Okay, let me increase the timing. Let's do 15 minutes. So we can see what happened during Asia session. So when I came into the market and saw what happened in Asia session, they were trying to push the market up. So what I assumed here was an accumulation of order, maybe assumption, assumption again. Don't take my words for so like I said, assumption. So what I assumed here is that they were trying to accumulate orders up. So even what I already saw in this New York market just gave me an idea that there's a high chance when the Wall Street boys, when they jump into the market in New York session, they're going to long the market because of what I see happen here. So this point is where they are trying to just gear up for the market accumulation of orders. Then the same thing happened, funny enough, in New York session. So when I just came into the market, I told myself, let's look for a demand zone and buy. So when I came into the market, what I told myself is, okay, this point here, let me take out this zone. This point here will be my first target. So I assume this point will be my first target. So if I'm going to buy, I'm going to be looking at this point with a very critical assessment because the market might dump from here. So if it crosses this zone, I had more contract to my buying power, then push it to this place. Then if it gets to this place, I get out of the market, even if it continues. Where do I care? I do care that it continues, but this is this is my second target. So this is where I'm happy to at least take my profit. So this is seven. Okay, this is already 7:45. So just push it to around 9. So I think we are close to 9. Yes, we are close to 9 already. So this is what happened when I got into the market. This was exactly where I wanted to take my trade from, this demand zone. And unfortunately, I think it tapped, so I just had to jump and do a market execution. So let me see. This is the demand zone I was planning to take it from. Okay, I'm not sure it tapped. I think it just started moving without tapping. So what I did was I just jump in market execution. But basically, if I want to enter properly, this was where I would have loved to enter from this demand zone, but it did not tap into it. So what I did again was, okay, before I even jumped there, what I did first thing was also mark this zone, this is the London zone. So I marked this up here and I had it in my head as well that if there's a break of this structure up, this is another confidence for me that this market is going to be a proper buy. And this candle here pushed up. So I just assumed, okay, let's see if you're going to retest, which it did not retest. So what happened again was I decided to take it from here. But eventually, I did not take it from there. I just jumped into the market. I did a market entry, jumped in from here. I'm supposed to jump in from here or jump in from here, any of these two zones, then buy up, use this as my first target, then this will be my second target. So where's the buy? This is the buy. Yeah, long. So I'm supposed to long either from here or here. So let's just long from the first zone and wait for a tap. I think it still came to tap, but I did not just wait for the tap. Let's just see. So if I had taken it from here, it was just 1, 2, 3. But if I had waited and allowed it come to the zone I was expecting it to tap, this particular point here, and my stop loss around, let's say this place, around 1 to 5. So, but what I did was jump in at market entry. I'll adjust this and let's see if it will tap. Play it and see if it will tap. Come back and tap. Look at it, did not come to that, it was just going. It was even too fast. So this was what happened. Let me Yeah, I need to take it back. I need to take it back and yeah, so exactly this was what happened. The thing just jumped. So I think I entered my market entry was from here. Let me reduce the timing so we see how the market plays out properly. So let me use 1 minute. Let's assume that I think this 1 minute is going to be very slow. Let me just use three. So when I saw it was spiking up from here, this was where I entered market entry. Let's use how many quantity? I bought about three contract. So just bought from here. Then my stop loss was below here. So if you entered from here, market just kept on going, kept on going, kept on going. Then when it got here, I came out of it because this was a supply zone that reacted heavily on the market and the market dumped. So this was where I took profit and I was out of the market. Yes, that's basically what how I did my technical analysis. Look at the higher trends. I think some people call it top-down analysis, which is it should be correct. Yes, top-down analysis. So you go from higher time frame, then you move down since the market is fractal. Anything that can happen in a higher time frame also happens in a lower time frame. So this is basically how I took the trade today. Yep, so I'm going to stop sharing that. This is it. I'll see you guys. Hopefully I go live again today and I'll see you guys. Bye bye. Let me stop. How do I stop this? Stop recording. Yep.